You just spent $90 million on a facility that turns entire trees into stacks of usable lumber. Not an office park, not a warehouse, a sprawling industrial yard filled with log piles, giant saws, and drying kilns the size of small buildings. And somehow, this loud, sawdust-covered operation is one of the oldest steady moneymakers in American industry. Welcome to the practical, no-nonsense world of owning a timber mill. Because today, you own a facility that turns raw forest material into the literal framework of houses, furniture, and paper products. Every single log, every single day. Let's talk about what you actually purchased. A timber mill isn't really one operation. It's a chain of processes that transform raw logs into finished, sellable lumber products. Logs arrive by truck or rail, often harvested from company-owned or contracted forest land nearby. Massive saws then cut those logs into standardized boards, beams, or planks depending on customer specifications. And drying kilns remove excess moisture before the lumber ships out to construction companies, retailers, and manufacturers. Timber mills generally come in two flavors: large integrated operations that own their own forest land, and smaller mills that purchase logs entirely from independent landowners and loggers. You've landed one of the integrated mills, and that changes your entire supply chain dynamics. Unlike a mill that depends entirely on outside log purchases, you control your own timberland, giving you far more stability over your raw material costs. Historically, timber mills trace back to the earliest days of American expansion, when settlers needed lumber to build homes, barns, and entire towns from scratch. The model barely changed at its core: cut the tree, saw the log, dry the lumber, sell the boards. So how does buying a timber mill actually work? You don't browse a business listing site for industrial sawmills. These deals happen through timber industry brokers, private equity firms specializing in natural resources, or direct acquisitions of mills going through generational ownership transitions. Your $90 million price tag is based heavily on both your production capacity and the value of the timberland you control. If your mill owns 50,000 acres of forest instead of leasing all its raw material, that ownership alone can significantly increase what buyers are willing to pay. Before you sign anything, you had to survive months of technical and financial due diligence. Foresters inspected your timberland to assess tree age, species mix, and sustainable harvest rates for years to come. Engineers inspected every saw, kiln, and piece of processing equipment for efficiency and remaining operational lifespan. Lawyers reviewed timber rights, logging contracts, and environmental permits tied to your land and operations. And regulators had to approve the transfer, because sustainable forestry practices and environmental compliance are heavily monitored by government agencies. Financing a purchase this size rarely comes from one source. You likely combined your own capital, asset-backed loans using land and equipment as collateral, and financing tied to future lumber production contracts. That's the fascinating part of timber mill ownership. Your land itself keeps growing in value even while you're actively harvesting and selling from it. Your first morning as the owner starts before sunrise at the log yard. Truck drivers are already unloading fresh logs harvested from your timberland the day before. You walk the mill floor, watching massive saws slice logs into boards with surprising speed and precision. Every board foot of lumber you produce gets sold at a price that shifts based on housing construction demand nationwide. Every acre of timberland you manage also grows in value as the trees mature toward their next harvest cycle. Multiply that by millions of board feet produced every single month, and the financial scale becomes obvious very quickly. You check the control room, where sensors track kiln moisture levels, saw efficiency, and production output in real time. This isn't just manufacturing, it's a data operation, tracking every log, every board, every dollar around the clock. Now let's follow the money, because this is where timber mill economics get genuinely fascinating. Your revenue comes almost entirely from selling finished lumber, but pricing is deeply tied to housing market cycles. Lumber prices swing significantly based on new home construction, renovation activity, and broader interest rate trends. Some mills diversify by producing specialty wood products, paper pulp materials, or engineered wood beams alongside standard lumber. Others focus purely on high-volume standard lumber production to maximize efficiency and keep costs predictable. On a well-run mill, daily revenue can range from $100,000 to well over $1 million depending on production volume and lumber prices. Annualized, that's tens of millions of dollars flowing through a facility that, once running, operates almost continuously throughout the year. Your expenses are dominated by a few major cost categories. Log acquisition costs, whether harvested from your own land or purchased externally, typically represent your largest single expense. Labor costs cover mill workers, foresters, and equipment operators working across harvesting, sawing, and drying operations. Equipment maintenance is constant and expensive because saws and kilns endure heavy wear under continuous industrial use. Transportation costs are significant, since moving both raw logs and finished lumber requires substantial trucking and logistics coordination. Many well-run timber mills operate with profit margins between 10 and 20%. Solid numbers for a commodity-based industry. Of course, nothing this essential comes without serious headaches. Problem number 1. Housing market sensitivity. A slowdown in new home construction can sharply reduce lumber demand and compress your margins almost overnight. Problem number 2. Commodity price swings. Lumber prices can swing wildly based on supply disruptions, tariffs, or shifts in construction activity nationwide. Problem number 3. Wildfire and natural disaster risk. A single major wildfire can destroy years of carefully managed timberland in a matter of days. Problem number 4. Environmental regulation. Sustainable forestry rules can limit how much timber you're allowed to harvest each year, directly capping your production. Problem number 5. Labor availability. Skilled mill workers and loggers can be difficult to find in rural areas where many mills are historically located. And problem number 6, maybe the scariest one, long growth cycles. Trees take decades to mature, meaning poor land management decisions today can hurt your supply chain for generations. That means even a well-run mill can, in theory, face serious raw material shortages if forest management isn't handled with extreme care. Some mills also generate additional income by selling wood byproducts like sawdust and bark for mulch, fuel pellets, or industrial use. Carbon credit programs are also becoming a small but growing revenue stream for mills that manage their forest lands sustainably. Some mills export a portion of their lumber overseas, adding exposure to international trade policy and currency swings on top of domestic housing trends. Others sign long-term supply agreements directly with major home builders, trading a bit of pricing upside for years of guaranteed, predictable volume. So, is owning a timber mill actually worth it? Financially, few industrial assets combine essential material production with a genuinely appreciating underlying asset. People will always need lumber for housing, renovation, and countless everyday wood products. Your own timberland keeps growing in value year after year, regardless of short-term lumber price swings. Your mill captures a slice of one of the oldest, most fundamental industries in the country, because as long as people build with wood, someone needs to supply the lumber. But you're not just buying saws and kilns. You're buying exposure to housing cycles, weather risk, and decades-long land management responsibility all at once. The smartest owners treat their mill less like a simple manufacturing operation and more like a long-term land stewardship business that happens to generate lumber. Keep your forest land managed sustainably, keep your equipment modern and efficient, and keep enough cash reserves to survive housing market downturns. Do that, and your $90 million timber mill could generate strong, appreciating returns for generations, quietly supplying the wood the world builds with the entire time. So congratulations, you didn't just buy a timber mill. You bought a piece of the forest itself, one log, one board, and one house at a time.